In this video, we are going to be analysing Lululemon, ticker LULU. If you want your own stock analysed, throw that in the comments. We'll get around to it when we can. Now, to get straight into it, again, the close of Friday, we closed at $365. We were up around 11% coming into the close. So what are going to be these key levels? Because obviously they did have their earnings. It did skyrocket off those earnings. But why did we start to pull back? And you can see exactly why we started to pull back. On the left, we have a 6-month chart. On the right, we have the 1-year chart. And you can see what are our resistance? What are our first deviations? And it's $383.50 and $385. So that was basically our key range of resistance coming into earnings. That's going to be heavy resistance. If we did break that, then obviously we were paying attention to the 412 to 415. But in this case, we didn't. We came to the 385 and we're starting to pull back off this level. So what is going to be that key target? So we would expect to pull back to around 355 because this is our statistical mean between the 6-month and the 1 year. So it makes sense for that to be that pullback level. Now, once we come into this level, the direction is a gamble. So to me, and I'm more of a reversal trader, I'm not going to trade in that range. What I'm going to do is wait for it to pick a direction, and then there may be some trading opportunities. But if we come back to test this 355, we push back to the upside. What I'm waiting for is really a break of the of the recent high and that 52-week high. And if we can start breaking that 390 level, then again, 412 to 415 is going to be that key level. And again, now we're coming into our second deviation territory. And if you understand standard deviations, you know the second deviation, what it usually means is 95% of data is within those two deviations. Again, nothing in the market is really going to be 95% accurate, but it's just a good indication that if we start coming up to these highs, we are most likely going to start pulling back. And we can see it worked really well off that first deviation. So the second one is likely to do that same effect. So again, that would be that key resistance. And that means there's two ways you can use this levels. If you're a trend trader, that's a target. If you're a reversal trader, that is a potential reversal level. Now, if we did break that again, just to note, we do have one final set of resistance levels around 440 to 445. So those are the three key sets of resistances. Again, we talked about the 355 statistical mean. And now if we want supports, then we're looking at the 325. If we break that, I'm paying attention to 295. And if we break that, we have about a 267 to 265 key support level. Again, considering where we are right now, main focus is going to be 325 if we can pull back all the way to there, potentially looking for a bounce. And again, this is because I'm a reversal trader. This is how I'm more paying attention to these levels. Again, bounces coming into 325, or if we break to the upside, getting short bias into that 415 level. Thank you for watching. If you enjoyed the video, you will probably enjoy this video too.